When it comes to keeping my legal business and personal wealth separate, there's a strategy I follow that many people overlook. And trust me, this isn't just about filing some paperwork or separating bank accounts. It's about building a structure that protects both your business and your personal life, allowing you to navigate potential legal pitfalls without ever mixing the two. Now, I know many people suggest simple fixes, like opening a business account and calling it a day. But if you want real protection, real separation, you've got to dive deeper. So stick around, because I'm going to reveal the crucial elements that make this process work in the real world. Let's talk about one of the first and most crucial steps: creating a legal entity for your business. Whether it's an LLC, S Corp, or C Corp, you need to make sure your business is a legally distinct entity from you. This is the foundation. If you're just operating as a sole proprietor, everything you own can be put at risk if something goes wrong with your business. But this isn't just about picking a business structure. It's about ensuring your business has its own credit, its own bank accounts, and its own financial history. This creates a clear boundary between your personal wealth and your business assets. In fact, I've worked with clients who failed to separate these things properly, and trust me, they regretted it when a lawsuit hit. Having a separate legal entity with proper filings can make a world of difference in a courtroom. Next up, let's talk about asset protection strategies. This isn't something people often address in regular business advice videos, but it's one of the most critical parts of keeping your wealth safe. When you create your business structure, you're also going to want to explore advanced tools like trusts or family-limited partnerships. These can shield your personal assets from potential liabilities that arise from your business. But here's the thing, not every trust is created equal. A basic living trust won't protect you from business liabilities. That's why it's important to consult with someone who specializes in asset protection. I learned that the hard way when I saw a colleague lose everything after not planning properly. Another element people often miss is proper insurance coverage. You can't rely solely on legal structures and asset protection strategies. I've seen far too many business owners overlook liability insurance or umbrella policies, thinking that their LLC or S Corp will be enough. But what happens if your business faces a lawsuit for something outside of its direct operations? Without the right insurance, you could lose everything. It's a risk you don't want to take. Now, if you're thinking this is all about just legal steps, you're missing a key piece of the puzzle. I've always stressed the importance of having a clear, well-documented separation in your daily operations. This means using separate accounts for both personal and business expenses, setting clear boundaries with your financial team, and making sure everything you do is on the up and up. I've had clients get into trouble simply because they failed to document where their personal and business transactions started to blend. Keeping a clean paper trail can be the difference between winning and losing in court. But here's the part I want you to stay tuned for. There's something that most business owners don't even realize could be the most important step in keeping their wealth separate. It's a nuance in how you treat the money you pay yourself from your business. If you've never considered how much you should be paying yourself, or how you take distributions, this could be the most important piece of the puzzle for you. And I'm going to break it down for you in a minute. You see, when you're paying yourself from your business, there's an optimal way to structure it that keeps things clean and prevents mixing your wealth. If you pay yourself too much, it could look like your business is just an extension of your personal life, and that opens you up to personal liabilities. If you don't pay yourself enough, you could be subjecting yourself to unnecessary tax implications. This is something that can't be overstated, and I've personally seen how doing this the wrong way can land you in some real trouble. So, if you found this video helpful, don't forget to subscribe. I'm not incentivized by affiliate commissions, so I can provide honest, value-packed content that cuts through the noise. If you want more of this kind of insight, hit the subscribe button, and let's make sure you keep your legal business and personal wealth separate for good.